Hey guys, welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video where I'm going to go over everything you need to know for the week ahead in the market. So where we start these videos are the earnings for the week are up there on the screen for you guys to take a look at. It's earnings season is really dwindling down, but there's still some opportunities there. So there's your earnings right up there. All right, now going over to our economic calendar for the coming week, it's very important to know when these reports are coming out, when you're trading, okay? A lot of these are coming out before the market opens, and they really set the tone for the day. So you have Consumer Price Index on Wednesday, and you have PPI on Thursday. Those are your two big days. Those are inflation gauges for the Fed. Inflation is in the rearview mirror. It's more about the jobs report. So we saw last week with our jobs report, this really got things going, okay? Not only did this come in weaker than expected, so less jobs were added, June and July were sharply revised lower, okay? So that means that the past 3 months was the worst monthly average since June of 2012, not counting the 2020, COVID crisis. That is really, really weak. So, the market did not like that because we already know that the Fed is going to be lowering rates. So what used to be good news, with these reports coming in weaker, it is not good news anymore. So this is showing definitely cracks in the labor market. You need people to be working, to be making money. It's as simple as that. Once people are not working and there's not jobs being offered and the unemployment rate is going up, that is not a good sign. All right. Now, the Fed is definitely going to be lowering rates. It's just a matter of, is it going to be 25 basis points? Is it going to be 50 basis points? Nobody really knows. But to have 3 months of really bad labor market is not good. We'll see what happens with the economy, but the market is definitely not liking any of these signs that we're seeing. So recession could be possible, all that kind of good stuff. All right, so that's your economic calendar for the week. All right, guys, these are the sectors and their relative performance to each other. You can see here on Friday, really, really bad day for technology. On the week, same thing, really bad for technology, but it is still up big on the year. So keep that in mind. There's still a lot of downside potential because a lot of stocks are still up in the technology sector, huge, like crazy. So there is still that bubble to be continued to burst. All right, so that's your sectors here and their relative performance to each other. You can take a look at that if you'd like. This is on Finviz. If you want, the homepage has these nice, low float stocks that could be continuation for the next week. You can take a look at that. Just look at these top gainers here and the percentage that they were up, and then take a look on Monday and see if they're popping up again, because these can give some huge moves and some really good potential to day trade. All right, guys, going over to the SPY, okay? This one really tricked me in last weekly watch list video because we were looking at this candle, this bullish hammer candle that happened last Friday. Closed at the highs, looks like it was going to break out, and then we came in Tuesday morning, Monday the market was closed, and the market was selling off. So it was really wild to see that Friday had some high volume here. Big green candle, nice bullish candle, and then we've had this sell-off ever since. So that really got me, sort of a fake out, but then the market opened lower and then just kept going lower. So if we look at this on the 4-hour chart, we can sort of dial in some better levels that we see on the SPY. So once this broke out of this 555 area, then it came back and retested it and then continued to sell off. Okay, so it was a very clear level. You had this consolidation here. You've had support. It was resistance previously, and then had support. Once we broke that, so you broke out of all those trading days, that big range, and then we broke down and then had a beautiful retest. But once it broke, that is not a great sign. So pretty early in the week, you were able to see where the direction was going. So we did see here in the last couple of days, another level was broken, and that was that 550 level. And that was broken on Thursday, retested on Friday. We opened up and then just sold right off from that level, that 550 level. And then we just continued this really, really wild sell-off, actually. So you can see here, volume, really negative, lots of volume, lots of sell-offs. That's a distribution day on the S&P 500. And, where do we go from here? That is a good question, because if we look at this on the daily chart, we have this trend line from COVID lows. It was hit back here in 2022. Then it was hit here in 2023. So the market, it seems like, has a really big sell-off going on currently, but it is still so elevated from this trend line. It's still really, really up huge from where we were. So, it looks like everything is looking red and bad, but it's still up so much. So this is just natural pulling back of really, really elevated prices. Now you can say here, this is a double top, a really good double top in the making, which is not bullish, but you can see all these trading days, we couldn't go higher. So that tells you something. That could be the highest that we see the market in quite a while. Who knows? Who knows when we go back to those highs? But you couldn't do it here. So that's suggesting to me that we're probably not going to revisit those highs for a while. All right. So right here, we're at that 440. You have some levels down here to 536, but you have the 200-day and you're still up quite a bit. And from the highs, if we look at this, we're only down 4% from the high. From all-time highs, we're only down 4%. Same cannot be said for the NASDAQ market. If we look at that one, you got this trend line very clear here, but it's coming back down. Now, this did not go to all-time highs. We'll see here, you got the 200-day moving average at 441. You have some huge volume on these big sell-off days, distribution days, just meaning the big money is selling, but the market is still up on the year. And it's still up huge when we look back to those COVID times. So that's the market here. That's what we're currently looking at, this 200-day, and then you have this trend line right here. But we're making now lower highs. Will we make a lower low? That's what we'll be looking for going forward. RSI heading down to that oversold area. So we'll have to see. The VIX, we look at this one. This is starting to pop back up also, okay? We were looking nice. Like I said, before we made that weekly watch list video from last week, we were down here. And then we saw that Tuesday, boom. And then again, Friday. We'll see if there's continued selling. This is definitely institutional selling that we're seeing here. A lot of profit taking. So looking at NVIDIA, this is another one. We're making lower highs. Will we make that lower low? You have a really solid support area. And we can see here, right back at the beginning of August, we opened up lower on NVIDIA and had a huge rally, right? Because that was coming right into this area here. Resistance, 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 broke out of that. Naturally, when we came back to this to fill the gap, that was going to be support, and that's what we saw here. But now coming back into it again, we'll have to see what happens. Okay, so that's NVIDIA. A lot of selling also going on with that stock. It's also bringing down the rest of the market with it. All right, so that's it. Just a quick weekly watch list video for you guys. Hit the thumbs up, and I'll see you back on the next one. Take care.